I think that is more and more becoming important, and we're seeing even in our schools talking about behavioral finance. You know, in traditional finance, it's all about, you know, we're saying these are the factors that impact prices are things like your earning potential, or a lot of times we like to talk about the capital asset pricing model, and I'm pretty sure every finance student has heard that before. And a big assumption is that investors are rational. And as we know, that's
not the
not
case.
realistic, right? It's not realistic for us to be rational. And so a lot of times we do have those fears and regrets. And so I think it's good to know that, like all prices, a stock price is all about supply and demand, right? And so kind of going back to that economics, it's simply supply and demand. And I think we could see in a couple years ago, right, the meme stocks.
Yeah.
We had GameStop, we had AMC, and those prices didn't reflect the true worth of that company.
No.
So it kind of took the traditional finance right outside the door, and instead what really impacted was just kind of like a herding effect. You know, Reddit said, hey, look, check out these, brought attention to GameStop, and now everybody was kind of going in and buying it. And so it wasn't because of the worth of the company, it was because they had the fear of missing out. They wanted to flock to it because everyone else was doing it. It's a herding effect, right? So I think it's important to know that happens, and a lot of times it's not going to be, it's a short-term effect, right? And so also knowing that, I think even like COVID showed us, March 2020, the stock market plummeted. And I think that was based on fear. Everyone was afraid, you know, COVID is a real thing. Pandemic is now, it's officially a pandemic. And so we saw people doing these things that if they would have stopped for a second to think, wait, this is a short-term effect, it's not long-term, they would have realized they should have just stayed with it instead of just selling out. What we saw is a lot of rational investors actually go in and buy, right? They saw it was low, they're going to go in and buy. And that's really what it is. It's trying to have that cool, common effect and thinking, well, let's think rationally. But yes, emotions are part of it. I know that I have my own biases when it comes to investing that it's good to be aware of. So I made my mistakes with some of these biases, some of my emotions, and then, okay, let's not do this again and learn from it. Because yes, like you said, the stock market doesn't always behave rational. But I think in the long term, you do see some rationality. You will see like in 2020, the stock market bounced back. And so in the end, you do see a lot of rationality, but in the short term, knowing, hey, let's kind of put some of my emotions aside and think about the long-term effect.